What's up, guys? William Ryan here. Just going to be looking to go short on Ethereum on the 30-second. Okay, so I've delineated the high on the William %R. If price wants to come back up into here, into a premium, to then target the sell side resting here and down here. Okay, I'll be looking to go short. It could take out this low and then come back up. I'm okay with that, right? But this is a 1 minute balanced price range on the sell side of the curve, on the buy side of the curve, just extended out in the sell side of the curve. We have this fair value gap holding price here. Price came up, another fair value gap. So these two up close candles, if and when price returns back up here, I want to be a participant going short. Okay, we have the order block, the fair value gap, and sell side residing here. So we'd want to see this come up relatively soon for an optimal advance short setup. Okay, we also have a balanced price range in here. Okay, overlapping with the fair value gap, the order block. Okay. So if and when we get this William %R signature, we're going to look to go short. Okay, if we're looking for a price level, okay, I like 2,386.50. I like that level. That comes in pretty much right at the order block low. And if this sell side gets tagged, guys, before this setup occurs, then we will not be a participant in this move. So we want to see price now come back up into this range to go short. Stop loss is going to be here, roughly $135. So we're just going to look for 270 right there. Just looking for that low hanging fruit, 2-to-1 risk to reward. We don't want to be pushing the envelope. We just want to be getting in and out and getting what we need and then moving on. Just going to take a look at Bitcoin very, very quick. It was a nice setup in here for a short. Okay, so we can see that we have the William %R signature. We've gotten it already. That's why I wouldn't have liked to see this expand as much as it did. I would have liked to just see it kind of like poke its head, come into here, and then come back up, but we'll see what we get. Still want to see if this area in here will act as resistance to go short. I wouldn't be surprised, guys, if this wants to post a high in here to go short. Guys, I'm going to get in short here for 5 lots. Just in case we want to get out of there shortly and move lower. Okay, so we're going to scale in with 5 lots. Okay, so this here is good. Okay, we have William %R signatures going higher on the 10-second chart. So this could be indicative of the last move higher before going lower. Okay, we kind of want to see price slow down in here. We don't want to see price expand and shoot up through this area because that'll be indicative of this being the draw on liquidity. And we may want to reprice at a later date or at a later time. So we're in. Okay, so looking at it from a 10-second chart. Okay, I know you guys can't really see because of OBS, but this is indicative of higher prices. Okay, but because we want to go short, Okay, this is actually something that we want to see, right? Because it's indicating to us that the last leg of accumulation before they're going to go short is occurring. And we'll dive a little bit more into that when the time comes. And if and when this comes towards our TP, which is going to be here, so we're only looking for that 2-to-1 objective. We're not looking for anything more than that, right? I'm going to keep saying it. Our job as traders is to be profitable, not perfect. Our job as traders is to become profitable and not perfect. If you strive for perfection, you're going to fall short every time. Okay? We're not striving to be perfect. We want to see continued bearish candles here. We don't want to see, if this comes right back up, okay, into this area and takes out this high, I will not be interested in the trade. I want to see price continue lower with some speed. Just hit the bottom of that fair value gap again. Our stop can actually get moved right to the top of this BPR. And why do I say that? Is because we just came to consequent encroachment of it to the pip and then rejected. So I'm okay with reducing risk. This right here is not what we want to see, but we have to see it through until results. We want to see this high hold. We want to see this fair value gap start to give way. We don't want to see this balanced price range get traded through, because if it does, then we could potentially be going for the buy side over here and beginning a market maker buy model. Right? I'm looking for a continuation here for the shorts, but if we do trade back above this high, okay, and we get optimal advanced setups to go long, I'll eventually end up going long if the setup permits us. But for now, nothing changes. We're looking for shorts, we're looking for big candles to roll on over for the sell side liquidity. We want to see big candles here. Big candles for the sell side. Liquidity. The faster it does it, the better. The more time it spends within this range from low to high, like from our entry to where our TP is, the longer it spends in here, the more likely we are to get stopped out. Yeah, we prefer to see some big candles here to the sell side coming up. We don't want to see price slow down. We want to see bigger candles, okay, on the sell side of the curve than the buy side of the curve. So we want to see more volume going short than we did moving higher into our entry. Would you look at that? We got it on the 1 minute as well. So it's kind of nice when you have two time frames diverging like that. Or not diverging, sorry, confirming a trade idea. So the fair value gap here is a little bit bigger. Order block here is cleaner. So we're just going to stay on the 1 minute for now. Right, we don't want to see price come back up towards this high. We want to see big candles moving lower with some speed, with some magnitude. And you guys will see too, right? Like the amount of time we're spending in here right now is not ideal for our position. It's actually indicating to us that we may be on the wrong side, right? Because we're looking for low resistance liquidity runs. I'm not looking for high resistance liquidity runs, right? Low resistance, you're going to see price go through it and to it, or sorry, to it and through it, as opposed to high resistance liquidity runs. You're going to see price go for the liquidity and then start to reverse. Okay, so we want to see continued bearish candles here, big bearish candles. And this is the good thing too, guys, right? Like we're in profit here a little bit. Okay, almost a third of the way to our 2-to-1 R. And so again, like this is a demo account, guys. It's on TradingView. So I'm going to leave this trade on here, obviously. We're going to watch this pan out to stop loss or TP. Okay, but it's important to note, right? Your trade is in profit here. Okay, we want to be, keep in mind, we got to be preserving capital. Okay, so if you're not getting the signatures in price that we would typically like to see, like for example, okay, we want to see candles like this. You want to see expansion. Okay, we don't want to see candles like this. This is indicative of us being wrong, right? Like if we're going short and we get candles like this, that's awesome. We want to see slow, lethargic candles going up to our entry, and then fast, explosive candles moving away from our point of interest or our point of entry. Right, so we're just going to let the trade breathe. We're going to get our data, and we'll see what the market gives us here. I would personally like to see big candles to the downside within the next 7 minutes. I want to see this low get taken out in the next 7 minutes. See how we're compressing? Okay, price is compressing, slowing down. Contraction will lead to expansion. Okay, contraction will lead to expansion. Right at this point here, we should be getting big candles, and we don't want to see price come back up to our entry. There's no need for it at this point. We want to see candles that are going to target the residing liquidity below here. We don't want to see price come back up to this high. And this is the other thing too, right? You can reduce your risk here. We're not getting the delivery we want, but we want to see price or see the chart or the trade setup unfold, right? You can preserve your capital and put your stop above this high because it shouldn't come back above here. So I went from risking $150 to now risking $80. And at this point here, we're going to get stopped out. You guys are going to see we are contracting, and then price is now expanding. And if you look here, we have Williams R signatures for this potentially to be the last leg of distribution before moving higher. Right? Like we should have left here. If this was a low resistance liquidity run and the setup that we would want to see and the price action that we'd want to see get delivered, this high here should not have gotten broken. We should have just continued to move lower and to attack the sell side. So we're actually going to watch this take us out because I have conviction that it's going to take us out. And we could actually start a market maker buy model, right? Because we don't want to see these signatures fail. When these signatures fail, right, and these setups fail, it indicates to us that we may be starting to move the other direction. Okay, if this trade's going to be valid again, right, we need to see this low get taken out very, very fast with some speed, and then ultimately target here. The trade idea becomes invalid if we trade above this high Y. Okay, think about what we deem a market structure shift, right? A high taken and a balanced price range taken or created. So a high would get taken and a balanced price range would get formed, right? So this would be indicative of order flow now becoming bullish. Okay, we just want to see price, absolutely tank through here. We don't want to waste any time. So all this was in here was time distortion if we take out this low. Okay, if our TP gets hit. And when you have price action signatures like this, it's good to get out at that 2-to-1 risk to reward. You don't want to see price creating small candles going to and fro your point of entry. You want to see it come up and then leave it right away. You want to see price come up here and then, leave it right away. And this is also how you guys don't necessarily need a directional bias. Okay, obviously it's pretty important. But again, if it clutters your mind and kind of hinders your analysis, right, and it's too much for you guys, then you don't have to have a daily bias. Okay, you can trade without one. Right? I'm just looking at time, price. We're in the London session. I have my model here, and we have sell side residing. Okay, balanced price range, broke structure, came back up, we're priced into a premium, and now we're looking for the sell side to get taken. Right? Say if I was watching this chart, and like I just mentioned before, if this high gets taken and this balanced price range gets formed, if price comes back down into that and we have William percent R signatures, I'm going to go long for the residing buy side here and up here. Right? So there's ways around trading without a daily bias. And again, guys, it takes experience. But just really want you guys to be focusing on this fractal here. And again, this is one of many examples that we're going to be posting in the school group. Okay, I'm going to try and post one every single day if I can, my wins and my losses. So there it is, guys. There's the optimal advanced setup in action. Okay, working. And this is almost at 2 a.m. I don't even know what day it is. Thursday night. Okay, let's see if it reaches for the sell side here. Right, guys, there's your 2-to-1 R. Right? Manage my risk very, very well. Okay, all this in here was just time distortion. Okay, and this also takes a lot of experience too to see. But when I seen this market pump back up into this fair value gap, I moved my stop here. Why? Because if it's going to want to expand through this high, it's going to want to do it with speed. Okay, and it didn't do it, obviously. We went lower to our target. But I minimalized my risk, my exposure. Okay, why? Because price action wasn't giving me the delivery I wanted at the time that I wanted. I wanted to see price come up into here and then just fall over with some speed. But this big old candle in here, right, indicates to us what? Either that this is going to be a reclaimed order block, balanced price range, order block, fair value gap, or we're going to trade right on through this high and start a market maker buy model. Right? So I minimalized my risk and I held on to the trade. I didn't get scared. I didn't take the trade off. I saw the trade through until results. Just because it wasn't looking good, right, doesn't mean that the trade must come off. Right? You must, like in the first training video about the trading plan, minimize your risk. If emotions come into play, okay, or signatures in price that you don't want to see, or delivery of price that is not favorable, lower your risk. There's nothing wrong with that. There's absolutely nothing wrong with that. And you can see here, it didn't. I didn't close my trade. My trade still panned out. Very, very nice. Right? So I just hope you guys learned something from this recording. This is actually a very insightful video. And until next time, we will see you in the next video. God bless you guys. If you guys have any questions, like always, don't hesitate to reach out.